Good morning to one and all. Myself, my name is Kalyani, working as lecturer in Commerce Department. Today my topic is accounting subject. First of all, introduction of accounting. In the accounting is the evergreen subject. Why? Because in the every sector we can use of the accounting. In any process we can recording of all transactions according to the form. So in the form we can follow the expenses and also losses and incomes and gains. So first of all, accounting is the transaction is analyzing, summarizing, recording, interpreting of results means the form is losses, gains, and first of all we can interpreting of the profits and losses of the firm. So we can follow the accounting principles. The accounting principles is also called as golden principles of accounting. In the golden principles we can divide it into three types of rules. The first one is personal rule, and second one is real rule, and third one is nominal rule. The first one is personal rule. The personal rule is deals with the persons. It consisting of the two aspects. The one is the debit and another one is the credit. So debit is receiver, credit is giver. And after then real account. In the real account also having the two aspects. The first one is debit and second one is the credit. The debit is what comes in, credit is what goes out. It totally deals with the assets, goods and like that. And third one is nominal rule. In the nominal rule also two aspects consisting, and the first one is debit. Debit is the all expenses, losses, assets. The credit is the all incomes, gains and liabilities. So first of all we can see first principle is the personal rule. The personal rule is the debit is receiver and credit is the giver. So like that we can take in the one journal entry. We can see the first of all credit transaction is the observing of the person name. The first of all we can purchase the some of the goods from some X. So we can receiving the goods from X. So X is giving to goods, giving to us goods. So that's why the X is the giver. So giver is the credited to account. And the next one we can receiving the goods from the X. So purchasing of goods, purchases is the debited to personal account and X is the credited to the personal account. Why? Because X is the giver. So giver is the credited to the personal account. So that's why the entry is purchases account data to X account. And next one is real account. Real account is deals with the totally assets and goods. So assets is goods. We can like that the journal entry is the purchasing from purchases stationery, purchasing buildings and purchasing land and buildings, purchasing machinery, purchasing stationery, like that purchases goods. We can observing in the real account, we can purchase the particularly asset. We can compulsory intimation of the name of the asset. We can purchase the some of the goods. We can't mention the any type of the asset name. So compulsory we can write off the purchases. But in the problem or in the solution and any situation giving to the asset name. The asset name like that buildings, machinery, we can compulsory mention of the asset name in the entry. Otherwise we can't giving to the any type of the asset name, compulsory we can mention the purchases. So in the situation real account we can deals with the assets. So మనం ఇక్కడ పర్చేస్ చేస్తున్నాం కాబట్టి asset name compulsory indicated in the debit side of the real account. Why? Because in the situation what comes in debit. So like that in the organization receiving asset, machinery. So that's why we can recording the debit side of the real account asset, machinery account. In the same situation when the purchases of the asset or goods and opposite action we can pay the money. So the money is also asset, the current asset. The asset is goes out of the organization. Any entry having the two types of aspects, debit or credit. We can purchase of machinery, opposite side we can pay the money. Otherwise it is the credit transaction. In the credit transaction we can mention of the name of the person. And next one is nominal account. In the nominal account we can write up the debit side of the all expenses, losses, assets. And otherwise of the credit side is the all incomes, gains and liabilities. It is following the trial balance rule, but we can follow the only journal entries, all expenses, losses in the debit, all incomes, gains in the credit. So like that expenses or losses, the expenses, losses, so much of the lot of difference between expenses, losses. The expenses, in the time of expenses we pay the money, we can pay the money. For the instead we can feel the sum of facility from the any current or like that any goods from the any services. We can feel the sum of services, we can pay the money, that called is expense. In the situation we can receiving the benefit from the any services and the any goods, we can pay the money, that is called is expenses. Loss means we can't receiving any situation, any single paisa of the service or the any single paisa of the benefits, but we can pay the money. So that is the difference between expenses, losses. The simple situation, expense is the we can pay the money in the formation of the current bills and the etc. the rent of the house. We can receiving the sum of the benefits from the fans, refrigerators and etc. But in the house we can living in the house in the 1 month or any other situation, we can't live in the 1 month of the in your home, but you can pay the rent, that is called as the loss. So we can feel the benefits, we can pay money, that is expense. We can't feel the any facilities, but we can pay the money, that is called loss. So expense, loss. After that incomes, gains. The incomes, gains, we can earn the money from the providing benefits or receiving benefits. In the situation providing not the matter, we can receiving the benefit. The receiving the benefit means we can working as the any institutions or the any services, we can receiving the sum of the salary or wages, that is called as the income. So income is the credited to the nominal rule. In nominal rule is the treated as expenses, losses debit, incomes, gains credit. So that's why like example expenses is the rent. In the rent situation we can pay the rent in the formation of the cash. That's why that situation the rent is expenses is debited to the nominal rule. No, it is the expenses expenses, rent is the expense that were debited to the nominal rule. When the opposite action, we cash is the outgoes of the organization, that is called as the cash is the goes out of the organization, that is credited to the account. So first one is rent account debtor to cash account. Rent is the expense, and next one is income. Income means that is the like example is salaries. We can receive in the salaries. Salaries is the entry is cash account debtor to salary account. Why? Because cash is receiving it is comes in the organization, so that why debited to the account. Salary is the income, so income is the credit side of the nominal rule. So that's why the entry is cash account debtor to salaries account. So that's why in the principles of the accounting, each one is every consisting like that personals, that is the persons, and next one expenses, losses, and next one assets and goods. The total transactions related to the organization, every aspect is covering by the golden principles of accounting. So that why the principles is the golden principles in the accounting. And next one is accounting cycle. In the situation, in the accounting cycle is very crucial role in the accounting. Why? Because in the accounting principle consisting of the 4 steps, it is a simple steps. First one is a transaction. Transaction means every business or every organization or every firm start with the transaction. Without transaction we can't do the anything. We can't estimate of the organization losses and organization expenses, and after that profit or losses also. Why? Because it is a transaction mean purchase or sale. Every business is the target is maximization of the profits. We can receiving the maximization profits, minimization of the costs. So that's why we can follow the 4 steps of the accounting cycle. The first process is the first step is the transaction. Without transaction we can't go for the another steps of the ledgers and journal entries, trial balance and final accounts. When we can take in the one transaction, it is process to forward step to the journal entries, ledgers and trial balance and final accounts. So first of all we can analyze the transaction. What is the transaction? It is the credit transaction or cash transaction. First of all we can analyzing the cash transaction. It is go for the one transaction, one situation or the one journal entry. You can providing the special transaction or special journal entry providing for the cash. And credit transaction, we can follow the another entry for the credit transaction. First of all we can analyzing, recording, we can summarizing of the transaction. After then you will go for the journal entry. In the journal entry we can recognize the transaction of the which rule is applied for the transaction, that is the personal or the real or nominal. First of all we can purchase, simple example is the we can purchase the sum of the goods from the some person. So it is including in the purchases, cash or person. So we can follow the 3 rules of the accounting principle. First of all we can take in the credit purchases. Credit purchases means we can involve in the person name in the entry. So like that purchases goods from Arun. Purchases goods from Arun, we can entry written by the entry is purchases account data to Arun account. So that's why that is the credit purchases. We can receiving the goods from Arun, we can benefit receiving, and after then Arun is lose of their benefit. So Arun lose of their benefit, Arun is the credited to personal rule, and after then we can receiving the goods. So that's why purchases is the debited to the real account. So we can analyzing which is the aspect is belongs to which aspect, which principle. And first one is the purchase. Purchase means this is the goods. Goods is the according under to the real account. And personal is the person. Arun is the under of the personal account rule. So we can analyzing first transaction analyzing of the which rule is aspect, which rule is applied for the transaction. So after then you can write the journal entry. Okay. And next one purchases goods for cash. Purchased goods for cash, we cannot involve the any man. Why? Because we can receiving the goods and opposite action we can pay the money. In the same situation we can't write the any person of the name. Why? Because we can pay the money. So that's why we can't involve in the any person of name of the person. Only we can write the purchases account data to cash account. We can receiving the goods, in the opposite action pay off the money. And so that's why we can write the purchases account data to cash account. Purchases is the good, cash is the asset. Those are under of the real account rule. So in the same slight difference, the credit transaction and cash transaction. Credit transaction involve the real rule and personal rule. But cash transaction is under the only real rule. So first of all we can analyzing transaction, that is the cash, that is the credit. After then we can write the transaction. Transaction changes to the journal entry. After then we will go for the ledgers. In the ledger is the simple way, first book of the accounting. Why? Because in the ledger we can analyzing and simple way we can calculating the total types of the books in the organization. For example, purchase book, purchase account. In the purchase account, it shows the how much of purchases in the total month of the organization or year of the organization. In the journal entries, we can't find out the how much of purchases in the 1 month. But ledgers we can find out the how much of purchases, how much of sales, how much of cash receiving, how much of cash paying in the 1 month or 1 year. It is a simple way of the first book of the accounting. Ledgers is the so much of the help to any accounting and auditor. Why? Because it is a simple way, total amount of the purchases in the 1 year and total purchases of the in 1 month and total purchases of the in 1 week. Totally it shows of the their balances of 1 month, 1 year, 1 week or 1 day. Why? Because in the organization so much of transactions done by in the 1 month or 1 year or 1 day. It is impossible manner kept in mind in the any transaction. It is impossible manner of the any person. Human being, it is impossible manner. So that's why we can recording the how much of purchases in the 1 day, how much of purchases in the 1 month. It is the clarifying by the accounts only. Accounts is the source of the how much of purchases, how much of sales and how much of cash receiving, how much of cash paying. So total of the transaction, total of the accounts is shown by the ledgers. After then we go for the trial balance. In the trial balance we help of the ledgers. In the trial balance we can go for the separating of the purchases, sales and assets, liabilities. In the trial balance we can follow the one rule, but that is the nominal rule. In the nominal rule we can added the assets of the debited to assets and credited to the liabilities. In the time of we can use nominal rule with the assets and liabilities. That is the all expenses, losses, assets is debit, all incomes, gains, liabilities is credit. That is the nominal rule. This nominal is used in the trial balance. In the trial balance like that we can purchases. Purchases is the expenses of the organization, that is debited to the trial balance. Trial balance pro forma is the horizontal and vertical. Like that horizontal means particulars debit rupees, particulars credit rupees. The vertical formation is particulars debit credit. That like that we can separating from the debit credit. We can also follow the nominal rule. In the nominal rule all expenses, losses, assets debit, all incomes, gains, liabilities credit. So that's why we will go for the purchases, cash, buildings, machinery. So we can separating from the assets, liabilities, expenses, losses done by the nominal rule. And like that for example machinery. Machinery is the asset. In the we can observing the nominal rule all expenses, losses, assets is the debit. So that's why building is debit. That is the asset. So you can debit it to the buildings, debited to the trial balance. And after that creditors. Creditors means we can receiving some of the money from some person. That is the credited to we are credited to that person. So creditors means liability. So liability is the credited. Why? Because in the nominal rule all incomes, gains, liabilities to the credited. So that's why creditors is credited to nominal account. And after that in the trial balance given to the so much of information according to the purchases, cash, the total of the information is we can interpreting of the results of firm in the particular period, that is a financial period or any 6 months period, any period we can interpreting of the profit and losses of the organization. After then last step is final accounts. The final accounts means it is a consisting of two types of heads. The first one is trading and profit and loss account and second one is balance sheet. First one is trading account. In the trading account we can follow the same nominal rule. The first one is the expenses, losses of the debit, incomes, gains, credit. In the trading account we can only recording of the manufacturing expenses or manufacturing incomes. Like that simple words, the factory expenses, losses, factory incomes, gains we can only recording in trading account. And after that profit and loss account we can record office expenses, losses in the debit side of the profit and loss account and credit side of the office incomes, gains. And next one is all assets, liabilities we can posting in the separating of the balance sheet. We can preparing trading account, profit and loss account, balance sheet, any type of the accounts or sheets we can follow the particular period. The period means that is a 12 months or 6 months. In situation our Indian country, we can follow these two types of the periods of accounting. The first one is the financial accounting and second one accounting period and the calendar period. The financial period start with the April, end with the March. and second one calendar year start with January and end with December. So we can follow the any type of the year, that like that the financial year or calendar year. So the financial year end with the March and financial calendar year end with the December. So we can write up the heading is the trading and profit and loss account at the end of the March 31st 2023 or 24 anything year. So and next one balance sheet is as on 31st March or 31st December anything the end of the years. So write off of the heading. And the trading account we can taken up the only factory expenses, factory incomes. We can deduct from the total credit side of the columns from the debit column. The debit column amount is high amount, that is the leads to losses. The credit amount is the high, it is the leads to the profit. Why? Because credit side of the total we can consisting of the incomes. Whenever any situation we can having the high level amount of the incomes more than the expenses we having the incomes, that is leads to profit of the organization. Any organization main principle is minimization of the costs, maximization of the profits. And in situation the accounting branches having three types of branches. First one is the financial account, second one is the cost accounting, third one is the management accounting. In the cost accounting, how to reduce the costs in the different ways. The ways is the in the formation of the material, man, and next missions, money. So we can in which situation, which area we can reducing of our money and reducing of our expenses, reducing of the our material wastages. That like that it leads to maximization of the profits. When we can minimization of costs of production, after that it is leads to maximization of profits. So that's why anything we can concept is a trading account. But we can some example given to the accounts. In the trading account we can analyzing summarizing after interpreting of the gross profit. The gross profit is carry forward to profit and loss account, credit side of the profit and loss account. Why? Because we can incomes gains posted in the credit side of the accounts like the trading account or the profit and loss account. So we can carry forward the gross profit to profit and loss account, that is by gross profit carry transfer to P&L account, the credit side of incomes gains, the debit side of the expenses losses. In the profit and loss account we can take in the only office expenses losses, office incomes gains. In the debit side of the profit and loss account we can write the rent, taxes, salaries and depreciations, bad debts, provisions, so like that, so on as. So we can find out the net profit in the profit and loss account. After then the net profit is the go forward to the balance sheet, it is the capital. We can add it to the capital, net profit added to the capital, deducting the net loss from the capital. So anything we can find out the net loss or net profit we can forward to the balance sheet. In the balance sheet we can separate it off the assets, liabilities. So the first column is the liability rupees, assets rupees. In the liabilities like that the capital and drawings, interest on drawings, and after then creditors, bank overdraft, bills payable, like that. We can in this the liabilities we can separating the two types of liabilities. The one is the fixed liability and another one is the current liability. In the fixed liability we can take in the only debentures, and the current liability we can take in the like that bills payables, creditors, bank overdraft, that are called the current liabilities. Assets is also divided into two types. The one is the current asset and second one is the fixed asset. So assets is the like that cash, machinery, building, furniture, bills, receivables, debtors, so on as cash, investments, like that. So we can divide in the assets is the two types. One is the current asset, another one is the fixed asset. The current assets is the cash, bills, receivables. The short term investments is the taken the current asset. The long term investments is the taken the long assets or the fixed assets. The fixed assets also divided into two types, and the one is the tangible asset and another one is the intangible asset. The tangible assets is the we can feel, we can look like the like and feel and touch of the asset, like that the buildings, machinery, plant. And intangible assets we can't see, we can't feel, and we can't touch, feel and anything. We can't see the intangible assets. In the intangible assets, like that the goodwill, patents, trademarks, copyrights.
Thank you. Thank you.